Let me ask you something. Have you ever looked at the news and thought, how does this billionaire pay less tax than me? You work, you get a paycheck. Taxes come out before you even see the money. Meanwhile, someone worth billions somehow pays almost nothing. That doesn't feel right. And honestly, it feels illegal. But here's the part most people don't want to hear. Most of the time, it is legal. Rich Uncle Rob here. And today I'm going to walk you through a strategy that explains how very wealthy people live insanely good lives, avoid selling their assets, and still keep taxes extremely low for their entire lifetime. No offshore stuff, no crimes, no secret loopholes. This thing has been around forever. It's called buy, borrow, die. Now let me say this right up front so nobody gets the wrong idea. This is not advice. This is not something most people can actually do. And this is not a trick to get rich fast. This is a system that already wealthy people use to stay wealthy. But once you understand it, a lot of things about money, taxes, and inequality suddenly make sense. So let's break it down, step by step, using normal language. Step 1. Buy. Most people build their life around income. You get a job, you earn money. The government takes a chunk. Then you try to save what's left. Rich people don't think that way. They think about assets. Assets are things you own that go up in value over time. Stocks, businesses, land, real estate, ownership stakes in companies. Here's the key idea most people miss. The government doesn't tax value increases unless you sell. If you buy a stock for $10 and it goes to $100, nobody taxes you on that increase unless you sell it. You can sit on that gain for years, even decades. And as long as you don't sell, there's no tax bill. That's a massive difference from working for a paycheck. When you work, taxes hit immediately. When you own assets, taxes are optional, if you know what you're doing. That's why wealthy people love assets that grow quietly. They don't want income that shows up on a tax return every year. They want value that builds in the background. Over time, this creates a huge gap between people who earn money and people who own things. But there's an obvious problem. You can't buy groceries with a stock certificate. So how do rich people actually live if they're not selling their assets? That brings us to step 2. Step 2. Borrow. This is the part that sounds fake the first time you hear it. Wealthy people don't sell their assets to get cash. They borrow against them. Banks love lending to rich people. Why? Because if someone has millions in assets, the bank knows they'll get paid back one way or another. So banks offer special loans backed by investment portfolios. These are basically credit lines where your stocks or other assets act as collateral. Now here's the important part. Borrowed money is not income. If rich Uncle Rob borrows $1 million from a bank, the IRS doesn't treat that as earnings. No income tax, no capital gains tax, nothing. It's just a loan. That means wealthy people can pull large amounts of cash without triggering taxes. They use that money to buy houses, buy cars, travel, invest in new businesses, pay for their lifestyle, all without selling their assets. And while they're borrowing, their assets keep growing. So imagine this. Your investments grow at 7% a year. Your loan costs 5% a year. You're still coming out ahead. Your net worth keeps going up, even though you're spending money. As the assets grow, the bank lets you borrow more. Old loans get refinanced. New loans replace old ones. This can go on for a very long time. At this point, most people ask the same question. Okay, but what about the debt? Fair question. That's where the final step comes in. Step 3. Die. Yeah, the name is dark. But this is where everything clicks. When someone dies, their assets get passed on under a rule called stepped-up basis. Here's what that means in plain English. Let's say you buy something for $100,000. Over time, it grows to $1 million. If you sell it while you're alive, you pay taxes on the $900,000 gain. But if you die before selling it, your kids inherit it as if it was bought at $1 million. That $900,000 gain disappears for tax purposes. It's never taxed. Your heirs can sell the asset immediately, pay off any loans, and owe zero capital gains tax. That's not a loophole, that's the law. Now let's put all of this together with a simple example. A simple example, meet Maria. Maria builds a business and ends up with $1 million she doesn't need to spend right away. She could blow it. She could sell investments as they grow and pay taxes every step of the way. Instead, she invests it in assets meant to grow. No big dividends. No constant taxable income, just growth. Over about 10 years, her $1 million turns into roughly $2 million. If she sold everything, she could owe a few $100,000 in taxes. So she doesn't sell. She goes to a bank and borrows against her portfolio. The bank lets her access about $1.4 million. That money is tax-free. She uses it to live, invest, and enjoy life. Meanwhile, her portfolio keeps growing. Years pass. Her assets grow faster than her debt. She refinances. She borrows more. She never sells. When Maria eventually passes away, her assets are worth around $8 million. Her heirs inherit everything at the current value. They sell enough to pay off the loans. No capital gains tax. What's left is theirs. Maria lived well for decades. Her family inherits millions. The tax bill on the growth? Basically zero. Why this matters? This isn't rare. Banks are built for this. Most major financial institutions offer these loans to wealthy clients. Usually you need at least $1 million in assets to even get in the door. The more money you have, the better the deal. Lower interest rates, more borrowing power, more flexibility. The system rewards wealth with better rules. Someone with $10 million can live extremely well without selling anything. Someone with $100 million can live on borrowed money forever. Meanwhile, people who work for a living pay taxes every single year. Income tax, payroll tax, sales tax, property tax. That's why raising tax rates doesn't fix this. You can raise rates all you want. If wealthy people don't realize income, the rates don't matter. This is why wealth keeps stacking up at the top. This is why fortunes last for generations. This is why tax debates often feel pointless. It's not about rates. It's about how money is structured. There's another part of this that really messes with people once they see it. This strategy doesn't just help rich people pay less tax. It changes how markets work. When someone plans to never sell their assets, they don't care about timing the market the same way normal investors do. They're not looking for exits. They're not worried about short-term drops. They're just buying and holding forever. That means a huge amount of wealth gets locked up and taken off the table. Those assets don't circulate. They don't get sold. They don't get redistributed. They just sit there, growing. That creates less supply and more competition for what's left. Prices go up. Regular investors feel like everything is always expensive. Meanwhile, the biggest holders don't care because they're not buying and selling the same way. This also explains why crashes hit regular people harder. When markets fall, working people panic because their savings are tied to income and short-term needs. Wealthy people don't panic. They already have access to cash through borrowing. They don't need to sell at bad times. In fact, downturns often help them. They can borrow cheaply, they can buy more assets, they can wait it out. Another thing people don't realize is how early this mindset starts. Wealthy families teach their kids to think in terms of ownership, not paychecks. They don't ask, "How much do you make?" They ask, "What do you own?" That mindset gets passed down along with the assets. Each generation starts ahead. Each generation inherits untaxed gains. Each generation keeps the cycle going. That's why this feels so impossible to break. It's not about effort. It's not about intelligence. It's about structure. Most people are stuck inside a system where income is taxed first and savings come last. The wealthy live inside a system where assets grow first and taxes come last, or not at all. Once you see that difference clearly, a lot of frustration makes sense. It's not that you're doing everything wrong, you're just playing a completely different game. The big takeaway: buy, borrow, die is not a conspiracy. It's not secret. It's not even hidden. It's just something most people are never taught. Understanding it doesn't mean you'll use it, but it does explain the game. And once you see the rules clearly, a lot of things suddenly make sense. That's Rich Uncle Rob's breakdown. If this helped you understand how the system really works, hit like, subscribe, and stick around. Because money makes way more sense once you stop believing everyone plays by the same rules. Before you go, See why having two incomes can actually cost families more and leave them poorer than just one.